So, good to see that Jim is positive on gold. For those of you that attended his talk, he thinks there's going to be a breakout of 20% in gold. So we appear to be in the right sector for a change. And I say for a change because gold hit a 6-year low last December, and our share price from its high 4 years ago was down 80%. So it's nice to see the share price and the gold price recovering accordingly. Okay, I'll just introduce you to the Landia project. It's a historic mine, which is a good sign. There's over 500,000 ounces of gold produced before at really high grade. We do all our studies are independently done mainly by SRK in Cardiff. So we have 2.4 million ounces of gold. We have at 4 grams. That's really high grade. We've got a reserve. One of the important features is that the break-even cost, or the all-in sustaining cash cost, is $700 an ounce. And as you know, the gold price closed yesterday at $1,230 an ounce. So we've got a $500 an ounce margin on our studies on the project. We're in a very mining-friendly jurisdiction with great infrastructure, and we own 100% of all the assets that we've got there. Okay, the strategy statement, we're now going through the permitting phase. We've spent $35 million in the last 5 years drilling up the project. Our market capitalization is just over $35 million. So in fact, you're pretty much getting in for the cost to date. So we're trying to permit this mine at the moment, and we've done a lot of work towards this. There's been 3 years of baseline studies and work that we've put into doing this. And I've just come back in a week ago today from Nicaragua talking with the government about it. They're very mining friendly, and I think we'll get that permitted. And we also think we're on a really big district where we can probably treble the number of ounces of gold that we got in the ground. So there's 2 important valuation considerations there. Great, and here's Nicaragua, just to highlight it for those who've not been there. I highly encourage anyone to go and visit. It's a beautiful country. Gold is the second biggest export. It's just a couple of countries above Panama in Central America. Why part of an investment in any exploration company? I just emphasize this. We are in exploration, we have resources, we do not yet produce gold. So please bear that in mind. We're not a gold producer, we're an exploration company. We go and find it on the frontiers, and we've done a very successful job here. But the government is being hugely encouraging. All the capex is fully tax deductible. They've got a very strong mining law. We formed a joint venture with the government, or engaged with a government entity to help us get the permits. They want to see it. It creates 500 jobs. It's the second poorest country in South America, and that helps alleviate poverty by putting up a new mine. And effectively, we can boost the 3rd to 4th biggest export by 30 to 40%. Sorry, the second biggest export we can boost by 30%, which is really significant for the country. Here's our mineral resource. This is all on a detailed 200-page report on our website. But we got 2.4 million ounces of gold. So at today's gold price, that equates to about $2.8 billion of gold in the ground. As I say, we have a market capitalization of approximately $35 million. Here's the project. You can see, just looking at it there, that we've got a road running through the southern end of the project, and we have power lines down the road. So in mining, it's important to have good infrastructure. We don't have to build a road to the project. We have a road tarmacked up to it. We don't have to put power lines into the project for 80 kilometers. We've got grid power we can come off, and that's very important. It keeps the costs down. We have about 500,000 ounces of those resources there are excluded from our mine plans. And importantly in mining, they're open along strike, meaning that there's more gold we think along strike. We just haven't drilled it. So along the length of the gold veins, this is a vein system. And also deeper down, it's open. We haven't closed off the deposit. This is a little bit technical. I just asked you to look at the second from the left, and I'm just going to read through it. There's 2,800 tons per day processing plant. That'll cost $120 million to put up. That's equivalent to 1 million tons of mineralized ore per annum. We have just under 1 million ounces of gold, 955, in different pit shells within contained pit shells in the studies. We have 882,000 ounces of recovered gold, which gives us 100,000 ounces of gold production per annum. The 2 scenarios on the right show upside, where we can increase that to 118,000 ounces and 165,000 ounces of gold production per annum. We have a 4th scenario where we think on a previous study we had from a group 20 years ago. There's another area which is outside this, where we can add another 50,000 ounces. So it could be as high as 200,000 ounces of gold at the study level. Now, we're getting permitted. I won't read all that off, but we've met all the main ministries that are required to get this thing fully permitted, the master one being the Ministry of the Environment, and that's going quite well. The district play. Now, this is a helicopter-borne geophysics photo where we took a helicopter over 300 square kilometres, 30 metres above the ground, and you have what's called a radiometrics and a magnetic survey. Now, we've also soil sampled about 100 square kilometres. The red blobs show the quartz rock, which the quartz rock contains the gold. That's at surface. So we had basically got a big footprint here. Now, just going into the share capital structure, we successfully completed a placement 3 weeks ago at 40p. We now have 52 million shares in issue. You can see we've got options are all employees, and we've got some warrants outstanding. So the market capitalization when this was done was about 24. The share price has gone up in the last week. I was in Zurich. One of the lead investors came in was Ross Beatty. So you can see at the bottom there, Ross Beatty has 7.2% of the company. He put in 1.5 million sterling of the 2.5. Jim Mellon maintains his 10% shareholding and put in another few hundred thousand. The IFC is the World Bank. They've invested $5.5 million in the company and have 7.6 million. So all those three have been to site. So yeah, Jim Mellon's actually visited Nicaragua. He's been to site. His technical people have looked at it in detail. So we got good validation from two billionaires who know about the mining sector. Both have sent teams to site, and the World Bank, the investment arm of the World Bank's also been to site actually 4 times now. And we're doing a lot of studies with them. Part of our de-risking of the project is that all our studies that we've done have been to World Bank or IFC standards for the environmental and social standards. So we have stakeholder engagement plans, communication plans, and so forth. And all that massively de-risks the project. Okay, so how do we value a company like us? Well, there are kind of 2 normal ways. One is ounces in the ground, where you take the market capitalization of the company, which I mentioned is $35 million US, and you divide it by the total number of ounces of gold in the ground, 2.4 million. And on that matrix, we're valued at $14 US per ounce in the ground on the far right. When it's $10, that includes El Salvador. We have another 1 million ounces in El Salvador, but that's we're not giving any value for that. It's suspended at the moment. So the point there is you can buy an ounce of gold for $1,230. You've got a gold bar for that, or an ounce for that. Or secondly, you can buy a Condor share at 1% of the gold price, or just over 1% of the gold price, about 1.1%. The other way is looking at price to book value, where we have an NPV averaging 195 million, and we're 0.17 times book value. There's our share price chart. I've gone red here. It's only got 10 minutes. You can see we come off from £1.20 to 40p. We were back at 160 at one stage. So what's next for us? We're de-risking the project. We're getting permitted. We're showing the upside. We think we can double easily the number of ounces that we've got by showing it's a district play. And that concludes my presentation within minutes. I don't know if I've got time for any questions. If Scott's there or anybody. Until I get thrown off, if there's a question from anybody.
Once you have the permitting, how long will it take to build the plant and get the gold mine into production?
Right. When we get the permits, and it's for a base case of 100,000 ounces of gold a year, important thing on that is our break-even $700 an ounce, and we can sell at, say, $1,200 plus today. So you get $50 million free cash flow a year as on the matrix. The build for it, according to Lycopodium of Australia, and they're a company in Australia that you can look them up, they're listed, they do nothing else but build gold mines. So they say an 18-month build. We would put it at 2 years to get all the equipment in, but it's about that. How do we finance it? Gold's a currency. You can either forward sell some of the gold. There's about $1 billion of gold here. So you can forward sell it. The cost is 120 million. Or you do some debt to equity, or you do it at the asset level, i.e. we put in the asset and our work and our cash, and somebody else puts in the mine building expertise and builds it for us, so we don't have dilution of the shares at the PLC level.
Yeah, I was interested, the recent fundraising, so what are you going to use those funds for, and how long do you estimate they'll last you for?
I think it'll last 12 months on the current budget. So we're looking to do two things: get it fully permitted. I have 30 people on the ground, so we have an element of funding our G&A and our costs and listing costs and so forth. So we'll get it permitted with that. The second, that's a big de-risk to have a permitted mine. The second thing is we'll buy the rural land. We have 800 hectares of land to buy, which is the site infrastructure for the processing plant and the tailings and the waste. And the way we're doing that is we're paying 10 to 20% option money down with the right to buy the land for 2 years. So that'll take up some money. And we'll do some exploration. We've only soil sampled a third of the 300 square kilometres, and we'll soil sample the other 200 square kilometres, I hope, this year, to give us additional targets to show the upside. But I think we're funded through for the next 12 months. Thank you.
Thanks, Mark. Thank you very much.